Have you ever wondered how pro traders stay calm when the Nasdaq moves 200 points in 1 minute? Well, today we are going to find out. Welcome. I'm Francois du Plessis, your market analyst here at ATFX Africa, and today I am sitting down with Nicolus, a seasoned indices trader who thrives when volatility runs high and margin for error is razor thin. From managing risk on indices to refining strategies that stand up in rapid markets, this is a chance to get into the mind of a pro trader. Nicholas, welcome to the show. And could you tell our viewers a bit more about yourself?
Thank you very much, Franz. My name is Nicolas Nenzhelele. I'm a financial analyst and a certified panel account trader. So yeah, I think also CEO of BZ as well, to add on to that.
Absolutely fantastic. Nicholas, I think let's jump straight in. Let's get started. And I want to start things off today with the basics. Okay. So when we talk basics, one of the things that a lot of traders miss, and especially that I know so many professional traders do on a daily basis, is their trading routine. So could you walk us through your daily trading routine as a trader when you are preparing to trade indices?
All right. Before anything, of course, when we are going to be trading, first you have to look on what you are trading, of which I'm going to be trading Nasdaq. So before I prepare anything, when it comes to forex trading and when it comes to index trading, I only focus first on the fundamental side of it. So I'm going to first look at how the world is moving around. So when it comes to US indexes, I focus only on the US news and I check what is actually happening. As much as I'm going to also trade on the technical analysis, I'm not ignorant of fundamental setups. So I have to first understand what is going on around the world that is actually going to affect the Nasdaq. What is actually going on that is going to affect my trading. So first, I first look at the fundamental side of view. Then I have to check how is the tariffs going to affect the market. Is there any news throughout the week that are going to affect the market from Monday to Friday? This is your factory calendar. After that, I also have to check during the day. Is there anything during the day that is going to come out? That can be your CPR, that can be your unemployment rate, that can be your interest rate decision. How is that going to affect my trading decision? How is that going to affect my position? And all those, they also have to align as well with what I've seen in the market structure. If I am also looking for a buy opportunity during my preparations, it means that the news that I'm reading, they have to align with that. If they don't have to align with that, it means during my preparation, I have to sit and watch. So during the process of preparations, most important thing that I look at is how are the news going to affect the market, and that's a very important thing. And also know that am I going to be trading Asian session? Am I going to be trading New York session? Am I going to be trading London session? Sometimes I would boycott the New York session because there is so much happening around it, and trade when there's a slow volatility. So knowing all these time frames is part of my preparations as I'm going to be trading on the US indices.
Absolutely fantastic. And Nicholas, you mentioned indices quite a lot, and I want to ask the question as into why. Why indices? What makes indices for you so different from trading something like gold or forex, for instance? So, especially with regards to volatility and as well your strategy. So, why indices and not any one of the other asset classes? In your opinion, what made you choose that specific asset class?
Understanding. What made me choose indices is more of understanding that I'm able to understand it. It actually troubles me a bit if someone is going to trade something that they don't fully understand. So what draws me to them is fully because I understood them. I understood what makes them move, what makes Nasdaq move, what makes US 500 move, and what affects them. And what also made me choose them. And you mentioned that why not trade maybe gold or other indices as well. Also, the flexibility of it, because I'm able to be flexible when I'm trading the indices in different ways because they're all different. We do have the US 500, we do have the Nasdaq, we do have the US 30. So with between all of them, you're able to move and trade based on your comfortability and the way you see the market that is moving at that point. That because when you look at US 500, the risk is less because the spread is not as much as the US 30, and you've got your Nasdaq that is medium. So I'm able to be flexible when I'm applying my risk management between the two. I'm able to move around them. Should I feel that I'm not as much confident, looking at my analysis for the day, I'm going to go with US 500. Should I feel that it's medium, I'm good to go, I would go with the US 100. Should I feel very high confident when I'm going to place my trades, I'm going to go with the US 30. So the flexibility between trading on the US indices, it draws me near to it. And what made me choose them specifically not others, is the understanding, because I'm able to understand them and what moves Nasdaq, what makes Nasdaq go up, what makes Nasdaq go down. So the overall understanding of the indices and what actually affects them, it draws me more to them, and that I'm able to be flexible when I'm trading indices. There are days that we are not sure of our setups. Should I go in? So if I'm trading if I'm only trading one instrument, if I'm not sure, I might not trade it all. But if I'm not sure and there's a lot of doubt, I might just say, let me just trade the one, what I generally just pick from US 500 because it doesn't have high risk. It has got also low reward. And then I'm going to go into the market knowing that even the month that I'm going to lose is not that as much, because maybe I didn't want to miss out from the market and the opportunity that it's bringing. So that gives me an overall to love and fall in love with the US indices, because they give so much overall for you to choose from one of them which one is you're going to trade based on the market conditions that you perceive for the day or what you've analyzed. So that was set them apart for me.
One.
Zero commission on stocks? Yeah, nothing. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Wonderful. Nicholas, you mentioned risk management. And when we look at indices, this is one of the most volatile asset classes. So, how do you manage risk when trading such a volatile asset class? Do you have any like non-negotiable hard rules that you live by when you are trading indices on a daily basis?
Oh, no. Looking at it personally, I live by rules. I set rules for myself because forex trading is in a way that you can actually trade it the way you want. Nobody's telling you what to do. Unless if you're trading the prop firms, you just hit the daily maximum loss. So you have to set the rules for yourself. And for that to happen, you need to be very disciplined trader and beat yourself to be disciplined and beat yourself to be under subjections of your own rules. So I make it very, very, very important that I follow my rules. So to manage risk well, when I'm placing a trade, actually on my $50,000 US funded account, I normally open 2 trades, zero. Make sure that I also set a good stop loss for that. So I don't go beyond that. 2 trades. Actually, when I'm trading Nasdaq and when I'm trading US state, only one trade. To that kind of big account, that's how I make sure that I'm following my trading plan. I'm managing my risk well. So there's this thing that is also part of risk management, where you go in when you're supposed to go in simply because you've missed out, or the point that the market was supposed to pass, it has passed so high because of things like tariffs, and now you want to force your trades to go in. So this is also part of risk management, because where your stop loss was supposed to be, it's no longer going to be there anymore, because the market is now at a different point that you're supposed to enter. So what I do to manage my risk when that kind of things comes, and looking at the current moment, tariffs, what is currently happening now, I set buy limit where I know that this is going to be my entry point, instead of maybe just waiting for market to reach there, because sometimes to reach there and reverse at a high level. Actually looking at what is currently happening right now in the US economy, that Trump out of the blue can just introduce that there's going to be maybe 41 to, so now this forms a very, you need to find a strategy on how you're going to manage your risk, and managing your risk also is to also go along with your entry points. So the way I manage my risk, if I know that I might lose the entry point, I set my buy limit or my sell limit order where I know that I'm also going to set my stop loss where I want it to be, and also staying or minimizing my entry points as well, and the lot sizes that I'm going to enter, and staying minimum to certain what do you call it to certain lot sizes that I'm going to enter, and 2 positions only, so that I know that I'll be able to manage them well. And why 2 positions, you may ask? Why don't you just do 0.20 instead of only to 0.10? Most of the time, it's what is part of my risk management strategy, so that I don't. So that I could, sometimes I'm able to close 50% profit. And how do I close 50% profit? By closing one trade in profit and the other one will just lock profit. So should the market reverse, it means that it's going to hit my stop loss at take profit. It's going to hit my stop loss at an entry point, which means I'm going to make zero profit. But the other trade, I've already made profit. So capitalizing, so I would hold, whereas the other one I've already closed profit. So this is how I manage my risk well when I'm trading the Nasdaq, by making sure that I'm putting a good stop loss and making sure that I don't actually overtrade as well in that regard, because overtrading can also affect your management part by putting too many lot sizes, too many positions.
Nicholas, you also coach a lot of traders. Am I correct in saying that?
Yeah, that's correct.
100%.
Yes, that's correct.
So when coaching these specific traders, what are some of the common mistakes you see retail traders make when they are trying to trade something like NASDAQ or US 30? What are those everyday mistakes that they are making that are keeping them from being profitable?
This is a very important question. I would say perception, the way they perceive the market, and also coming to the market on the mindset side. Because in most of cases, the mistake that they make, it's perceiving a market in a way that is going to be a get rich quick scheme. So they need to look at the market at a different point of view as a business, of which in the business there's going to be a profit, there's going to be a loss, and it's not going to be an overnight thing. And the biggest mistake they make, because Nasdaq is the highest rewarding index, they are going to treat it like a gambling, because they would see that they can make so much money from the Nasdaq because it's high rewarding, but they would forget the bad side of it, which is taking the losses. So simply because it rewards a lot, also on the other side, of course, you might end up blowing account. So Nasdaq is not something that you do things they call the full margin. The perception of it, the moment they look to find out that it's high rewarding, now they perceive it as something that they're going to make a lot of money from it by not even applying risk at all. So we can't even call it a risk management, because there's no management of risk at all. The risk has been overlooked, has been ignored, to say. So that if I tell you, Francois, the longest way to get there, it's a shortcut, because with a shortcut, you never actually get there. So they're looking for a shortcut to be successful in forex trading, and they will never get there, because with a shortcut, you'll never get there. You always have to go back and find the right way to achieve success in forex trading.
Super tight spreads. Yeah, tighter than your jeans after Christmas lunch. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Couldn't agree with you more. And as we are closing up, and you've shared so much already, but if I had to ask you one more thing, if you had to give one piece of advice to a trader watching this today who is looking to improve their performance as an indices trader, what would that one piece of advice be to improve their performance?
No, thank you very much. It will be learning to be self-sufficient. And how do you be self-sufficient? When you're going to be entering the market, make it your point, make it your mission to be very intentional about growing in understanding the foreign exchange market. So in that case, it means that you need to invest in reading books, and do not ignore the psychology part of it. And as if you really want to trade Nasdaq and you are trading out there, don't ignore. Make sure that you understand what you're going to trade. So if you're going to be trading Nasdaq, you're going to be trading US 30, make it your point to be aware of things that during the day they're going to affect the Nasdaq, because you're going to say the market is against you. When you buy, it sells. When you sell, it buys. But you are never aware of the things that are going to affect the market during that day. So when I say that be self-sufficient, be aware, invest in education, it means that some of that education is going to make you be aware of that market is the game of probability, and that puts you in the right state of mind. And when in the right state of mind, you're going to know that, okay, I'm going to trade Nasdaq, and there's a spike, and what caused the spike. And even if you made a loss, you should know I made a loss because I ignored the news. When you're going to be trading the Nasdaq, we don't trade based on gossip. You don't just hear that Tesla is not doing well, then you begin to sell Nasdaq, and then you say even the news don't work. You never analyze, you never went in and understood what is actually happening. For you to go and trade Nasdaq, make sure you understand what Nasdaq is. For example, Nasdaq, it's an US index. It's a combination of American companies, of which majority of them, 100 companies, they are tech companies. And when there's things like tariffs and all these things, some of the tariffs, they're not being imposed on the US indices. Some, they do affect high time. Let me make example of unemployment rate, for an example. When it comes to unemployment rate, in the US, I'll just make a small example why it matters to be aware and to know exactly what you're trading. And if you're going to be trading a symbol like Nasdaq, I'm going to make just a small example. I'm home now. Just a good example, maybe there's 5 people in the village, and I want to sell a cologne. And I heard that nobody's working in the village. So I can't sell my colognes in the village because nobody's working. But if I hear that the government has introduced what they call EPWP, they're now starting going to employ people, then I can sell my colognes because people will want to apply them when they are paid on the payday. And it's very nice. So when we look at a larger economy, when unemployment rate report comes through, what does that do to investors? It shakes US investors. How can you invest? Who will we sell to? That's why there's no rest shop in the village, because there's nobody who can buy. So we have to also, when we check the news, how do they affect the invest? Do they cause panic to investors? Is this good to the investors? And when the investors are happy, what does that do to the market? So having that under market on the instrument that you're going to trade, you can't be trading an instrument and you don't know what makes it move. So if you're going to be trading Nasdaq and you've got a heart for Nasdaq, stop gambling. What you need to do, go and study the market, understand what moves the Nasdaq, what makes Nasdaq, and from there, good luck. Go and trade Nasdaq. It's a very rewarding US index, and there's a lot of money, and it's very easy to understand. Use your technical analysis in line with your fundamental analysis. You can say I've only traded the news or I only trade the technical analysis. Just don't be ignorant of either of those. That's the advice that I can give, with the examples given, of course.
Nicholas, thank you so much for those insights. I am sure every single one of the people watching this is walking away with something valuable that they can apply to their own trading. And for that, I thank you. And traders, if you found this helpful, don't forget to like, share, and drop your thoughts in the comment section. And with that, we wrap up our daily market brief for today. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.